The stock market is buzzing. News of a potential trade deal sent stocks soaring. Investors are hopeful. They see a light at the end of the tunnel. Could this be the end of the trade war? The market hates uncertainty. Trade wars bring uncertainty. A deal would mean less uncertainty. Less uncertainty is good for business. Good for business means good for stocks. The possibility of a deal is boosting confidence. Businesses may be more likely to invest and grow. This positive sentiment is spreading throughout the market. The bulls are running. This is a developing situation. We need to watch closely. Will this trade deal come to fruition? Only time will tell, but for now the market is celebrating. The trade deal is between two major economic powerhouses. The United States and China are the players in this high-stakes game. These two countries have been locked in a trade war for years. Tariffs and trade barriers have been common. The trade war has created uncertainty. Businesses have been hesitant to invest. The global economy has felt the strain. A deal would be a welcome relief. It could signal a thawing in relations. Both sides have a lot to gain from a deal. The US wants access to the huge Chinese market. China wants access to American technology and innovation. A deal would be a win-win for both countries. The world is watching this deal closely. It could have major implications for the global economy. The details of the trade deal are still emerging. However, here's what we know so far. Tariff relief. Both sides are expected to reduce or eliminate tariffs. This would be a major breakthrough. Tariffs have hurt businesses and consumers alike. Increased access. China is expected to open up its markets to more American goods and services. This would be a boon for US businesses. Intellectual property. The deal is expected to include provisions to protect intellectual property. This has been a major sticking point in negotiations. The deal is complex. It covers a wide range of issues. Negotiators have been working around the clock. The stakes are high for both countries. This is a developing story. We will continue to monitor the situation and provide updates. The stock market reacted swiftly to the trade deal news. Major indices surged upward, reflecting the positive sentiment. Investors cheered the potential end to the trade war. The Dow Jones Industrial Average, a key indicator of the market's health, experienced a substantial surge in response to the trade deal news. The S&P 500, a broader market index, also registered a significant gain as investors embraced the potential for economic growth. The Nasdaq Composite, heavily weighted towards technology companies, surged, indicating optimism about the tech sector's prospects under a trade deal. These gains underscore the market's relief and optimism. The trade war has been a drag on economic growth. This deal offers a path towards a more predictable and stable trading relationship. While the market celebrates, it's important to remember that deals can fall apart. Investors will be watching closely for any developments that could derail the agreement. Certain sectors will benefit from a trade deal. These sectors have borne the brunt of tariffs. Tech giants like Apple, Intel, and Microsoft stand to gain. Increased access to the Chinese market and reduced tariffs will help. Farmers could see a resurgence in exports to China. Manufacturers may experience renewed growth. Specific companies are already seeing stock prices rise. For example, Caterpillar experienced a surge in stock price. Boeing is also expected to benefit. Not all companies will benefit equally. The impact will vary depending on their exposure to trade with China. Economists and market analysts are cautiously optimistic about the trade deal's potential impact. They stress the importance of a comprehensive and enforceable agreement. This trade deal could be a game changer, says Dr. Emily Carter. Reduced tariffs and increased market access could boost growth. Market analyst John Smith adds, investors are relieved to see progress. A deal would remove a major headwind for the market. However, the devil is in the details. We need to see the final agreement to assess its impact. Experts agree that success hinges on implementation and enforcement. They emphasize the need for clear rules and mechanisms to address disputes. While positive, experts caution against expecting an immediate surge in growth. They believe the impact will be gradual, depending on business investment and consumer confidence. Trade wars are not new. History is replete with examples of trade disputes and their impact on economies. One of the most well-known examples is the Smoot-Hawley Tariff Act of 1930. This protectionist policy, enacted during the Great Depression, raised tariffs on over 20,000 imported goods. The Smoot-Hawley Tariff Act is widely believed to have exacerbated the Great Depression. It triggered retaliatory tariffs from other countries, leading to a sharp decline in global trade. The trade war between the US and China, while not as severe as the Smoot-Hawley era, has had a negative impact on the global economy. It has disrupted supply chains, increased costs for businesses and consumers, and fueled uncertainty. The potential trade deal offers a glimmer of hope. It suggests that countries understand the importance of cooperation and the dangers of protectionism. By learning from history and embracing free and fair trade, nations can foster economic growth, create jobs, and improve living standards for all.